What is fair market value for transferring family business ownership? Imagine you're about to pass on a family business to the next generation. How do you decide what the ownership shares are really worth? That's where fair market value comes into play. It's a key piece of the puzzle when planning for ownership transfer, especially in family businesses. Fair market value is the price at which a business would change hands between a willing buyer and a willing seller. Neither would be under pressure to buy or sell, and both would have reasonable knowledge of the business's details. This means the value isn't based on emotion or personal attachment but on what the business could fetch in an open market. To find this value, professionals called business appraisers use standard methods. One method looks at the business's assets minus liabilities, giving a cost-based estimate. Another considers the future cash flows the business can generate, which is the income-based approach. The third compares the business to similar companies that have recently sold, known as the market-based method. The goal is to arrive at an objective number that reflects the true worth of the business. In family business transfers, fair market value is especially important. It helps set a neutral, fair price for ownership shares, avoiding disagreements among family members. It also plays a big role in tax reporting. The Internal Revenue Service requires that sales or gifts of business interests be reported at fair market value. Using an independent valuation can help prove the accuracy of the reported value if the tax authorities ask questions later. When transferring ownership, different options are available. Selling shares at fair market value ensures the owner gets a fair price and the buyer pays a defensible amount. Sometimes, payments are spread out over time if the buyer can't pay all at once. Gifting shares still requires reporting the value at fair market value, which can reduce estate taxes but might trigger gift taxes if the value is high enough. Trusts or employee stock ownership plans are other ways to transfer ownership, but the fair market value remains the basis for determining the shares' worth. Family dynamics can complicate things. Owners might overvalue their business because of emotional ties, or heirs might question the valuation if it impacts their inheritance. Sometimes, only one child is involved in the business, which raises questions about how to treat siblings who aren't active. To keep things fair, families often use other assets to balance the transfer or agree on future roles and responsibilities. Clear communication is vital. Everyone should understand how the value was determined and how the transfer will affect their interests. In the end, fair market value provides a solid, fair foundation for transferring ownership in a family business. It helps prevent disputes, ensures legal compliance, and supports a smooth transition from one generation to the next. Planning early, working with professionals, and keeping open dialogue are the best ways to make sure the process is fair and successful.